Hello students, welcome to ShirtBack Academy. In our lesson today, we're going to be continuing in Module 2 in our Personal Finance course. Our topic for this lesson is Section 2.2, Credit Fundamentals. Let's begin. We'll begin by talking about credit. What is credit? Credit is the willingness of someone to loan money to an individual or business. There's a mutual trust that the borrower will pay back the money within a certain period of time. Debtors are the borrowers of money. They can be individuals or businesses. Creditors are the lenders that the debtors must repay money to. A creditor can be an individual, a family member, a bank, or a business. Principal is the total amount of money that's borrowed in a credit loan. For example, if you want to borrow $10,000 to purchase a car, the principal of the loan is $10,000. Interest is the amount of money that debtors repay in addition to the principal. It's a service charge for borrowing money, and it's calculated on a percentage basis. For example, in our $10,000 car loan, if it has 5% interest, the amount of interest we would repay is $500. It's $10,000 times 5%. Credit cards are rectangular plastic cards that are issued to borrowers to pay for goods and services. The amount that is spent with credit cards are the principal. Any extra financing fees are the interest. Debit cards are different. They allow people to pay for items directly from a checking or savings account. There are no repayments to third parties. All credit cards have several common features. Over here to the right is a screenshot of the front and back of a generic credit card. All credit cards will have issue and expiration dates. These are when the account begins and expires. Credit cards use magnetic swipe technology. That is the black horizontal stripe along the back of the card. This is where data is stored and read by credit card readers. Most modern credit cards have integrated chip reader storage. They're typically located on the front of the card, right above the account number. Credit cards also have CVV numbers. CVV stands for Card Verification Value. These are PIN numbers that are unique to each credit card. They're typically a 3 or 4-digit number back on the signature stripe. And all credit cards should also have the signature of the cardholder on the back. Credit terms are the repayment requirements for debtors to a creditor lender. It determines the amount, the time, and the interest that debtors must pay under the credit agreement. Credit limits are the total money amount that a debtor can borrow from the creditor. The balance is the current amount that is owed to the creditor. A billing cycle is the amount of time between payments to creditors. They are typically monthly. The due date is the scheduled monthly day for a debtor to make an on-time payment. APR is short for annual percentage rate. This is the interest that is paid to the creditor in addition to the principal. To figure out the APR, you would divide the balance by the amount of interest owed. Credit costs and fees are the amounts that a debtor pays to a creditor in addition to the principal and interest. Be familiar with payoff. Payoff is when we pay the entire credit balance in full each month by the due date. Typically, when debtors do payoffs, they incur no interest charges. Grace periods are the amount of time that debtors have after the due date before they incur any money penalties. Late fees are the amount that debtors must pay for failing to make payments on time or during the grace period. Annual fees are money that are paid to creditors for managing and administering borrower accounts. There are several different credit user types to be familiar with. Primary account holders are the person that are responsible for repaying all transactions that are paid with a credit card. They have a legal obligation to repay the money. This is called liability. Authorized users are people that the primary holder allows to use on the credit card account. These are people that are not required to repay credit card transactions. These typically can be kids or employees. A joint account is when two people are equally responsible for repaying credit card purchases. You see these most often with spouses. Cosigners are people that promise to pay on a credit card account if the primary holder doesn't repay. Cosigners are typically used with people that have poor credit scores. Credit agreements are the legal documents that debtor and creditors use to define the terms of repaying money. They should always be read in full before signed. Billing statements are detailed lists of all purchases that are made on a credit card account. Every statement should be reviewed to check for any unauthorized or fraudulent charges. Personal information are all the data types that can identify an individual. These can be your name, address, social security number, and others. We should always notify creditors of any changes to our personal information. Data privacy are the protections against creditors selling our personal information to third parties. We should always check with our lenders how they use our personal data. That will conclude this lesson. In our next lesson, we will continue with Section 2.3, Borrowing Options. If you have any questions about the contents of this lesson, please review the course notes in Section 2.2. We thank you for following along, and we will see you in the next lesson. Enjoy the rest of your day. Take care, everybody.